Hi, Randy Flett here. First of all, I just want to say thank you for putting your trust in me. I really do take my job very serious, and I try to get all of my clients the best possible rate, throughout the loan process. And I just want to share a few things with you, and then go over why I locked today. Just want to let you know that the majority of the loan officers have been taught to lock the loan immediately or shortly after taking the application. And secondly, the experts recommend doing this also. And they recommend that because one is they don't want you to be put in a position of trying to decide when to lock or when to float and get the blame. Now, the other reason that a lot of people don't use a timing service and do any type of recommendations to their clients is, time and money. It does cost a lot of money, and it also costs time because once again, I do monitor what's going on at the throughout the entire day. And then finally, it's a lot of responsibility because you put the trust in me to make a valid recommendation. And the majority of the time, I do get a much lower or better rate than what was actually quoted throughout the process. A lot of you that I'm talking to right now are previous clients, and you saw that, 6, 7 years ago. And even the new clients, you've seen that today. And I will always try to go on and do that. But I just want to show you my thought process of why I did actually lock today. This is one of three market timing services I actually use, and this is my favorite. And just very briefly, anytime when you see red, that means bond prices are deteriorating, getting worse, which means interest rates are getting worse also. Excuse me. Anytime when you see green, that means bond prices are improving and interest rates are improving also. Now, as you can see, we had a rally last week, and then on Friday, and I had told all the realtors, everybody that, hey, I think Friday's going to be a great day, and I expected to be way up here on Friday because I knew that the economic news was going to be bad, and I knew that that would go on and spur the bond market, thus lower interest rate. That didn't happen. What ended up happening is investors took profits. They sold off on the bond market, and also the Wall Street kind of took a look at it like, well, really the economic news is bad, but it's not that bad because they're grasping for straws because they want to believe that the economy is recovering, and unfortunately it's not. Now on Monday we had all positive economic news, which should have meant that we should have had a red candle here and it should have gone down. It didn't. It rallied. And today, once again, we had mostly negative economic news. We had a couple of good things, but the bond market actually rallied and interest rates improved. Now, I've shown this before, and when you're going through a rally, it's very important to have stair steps, and we've been having the stair steps. But once again, if you take a look up here, we're way up here, and here's a floor. And typically, what will happen, I'm going to show you this in a second, is here's a long-term view. We're in new range where we've never been before. But if you take a look, whenever we've had a peak, we have a valley, peak, and then a valley, peak, valley, peak, valley. And we've been having this prolonged rally since the 24th of March. And we've had these healthy stair steps, which is good. But I anticipate, and I don't know when, it could be tomorrow, it could be next week, 2 weeks, but there is going to be a correction. And when it happens, it's going to be down here, I believe. And I didn't want to go on and keep on floating the loans, not really knowing. Well, I wanted to get you the best rate possible. And I'm a firm believer that a bird in the hand is worth two in the bush. And this is what it looked like today. It was really great. However, if you take a look at Friday, you can see how it went down. We had like 4 alerts, to go on and lock on Friday. So you can see just the volatility of the market. Now, one of the other advisory services I use, it's Rate Lock Advisory, and they've been saying for the last 2 to 3 weeks or longer to lock if anything is closing within 60 days. And I've been floating against it. And because I've been floating against it, I was able to, for the most part, if you had an FHA loan, I was able to get you a better rate. As far as a VA loan, with the pricing different, I wasn't able to do that. But with the FHA, I was able to go on and improve everybody's rate. And I just hope that this helps explain a little bit as far as the thought process of why I ended up locking it. As I mentioned in the beginning of this video, I locked everybody's loans that's closing in September because one is we also have to have it locked in order to go on and submit the final conditions and also be able to get the documents for closing. So that is another reason that I ended up locking the loans now, besides the pricing was better than before. And if you have any questions whatsoever about this, please give me a call. I appreciate it. I was able to get a hold of most of you before locking it, but some I was not. But anyway, I just want to be able to help provide you the explanation and also how I differentiate myself. Sorry, couldn't even pronounce it. Than the other people. And as always, only wanting the best for you. Take care.